Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of BOLLINGER & Associates with your agriculture update for this Thursday, March 9th, 2017. And the time right now is about 2 p.m. Central Standard Time. Folks, I don't know if I'm going to be able to put out an update tomorrow. I've got appointments out of the office, and I've got to leave here about 12:30. I'm going to try to do the weekly updates. I'll do them in the morning as best as I can to get them out for you, but if I can't make it, you'll know why. All right, let's talk about it, because we had a USDA report today, and the report was the most bearish for the beans. It showed the carryovers, where you're at, and in a nutshell, it put pressure on all the markets. Now, here's the good news of it. This isn't that important of a report. It gives you an idea of what's going on. Let's understand the time of where we're at. We're at March 9th. So what you normally do with these type of reports is they add pressure to the market. They did it this time, and that's fine with it. Let the market come down. You ever hear the word spring lows? Then you go up and you wonder, are you going to get the crops in right? What are they going to do? You then get your summer highs, or does the market feed off the weather? And then the market comes down, and again, you're then talking harvest lows. There's terms that you hear in this industry over and over, and I think we're at those type of terms. That's all I'm saying. The other news, you saw the big break today in crude as they went after that big open interest. I don't know who the word they is, but they went after the big open interest. And there was a washout in that market without any question. And many of the stock indices, as you'll see, went down to numbers that I've been predicting, and I'm pretty happy with that. So let's look at the May soybeans and see what's going on. We've gone from 1080 to 995 3/4. If you cover the name of the chart, I want you to look back here. You're in a general support area. That's what's important. You'd gotten up over it, you've worked your way back in it, and that's what I'm seeing on the chart. Are we in a downtrend? Yes. How could you argue it? You've gone from 1052 to 1011, so you got a down thrust on closes. So they're staring you in the face. When you look at a regular bar chart, you can see how the market's been leaking down. And when we put on the all-important swing line, it's the chart without it, and this is it with it. We have those patterns of lower highs and lower lows. That's bearish. We then want to see where's the 18-day average and the 100-day average of closes, moving average of closes, my friends, the MAC. What I'm looking at for a bear case that you got to get nervous about is, what if you get a crossover where the 18 gets under the 100? That would be an awful bad case for this market, in my opinion. You then have to get over 1048.5 in order to negate this bearishness completely. A lot of resistance between 1034 and 1038. All you did today, and I was in the office going, people, if you're in this market, this is where I think the pros are covering, right here. The lower Bollinger Band made all the sense in the world to me, and the market, if you will, held it. So you got right down, knocked on the door, and now you're turning away from it. That's all. Doesn't mean you can't go lower, but you're also oversold. So I think the smart money was yanking in, not putting on shorts, yanking them in for the reasons I'm saying. Oversold against the lower Bollinger Band. In the meal market, if you look at this chart, and prices are falling, I'm looking at the combination, and this was Monday, if it keeps falling, of the Bollinger Band and the 100-day average of closes. And if you take a look, you started knocking on the door yesterday, and there you are today. Pretty clear. That does not mean this market can't go lower. It doesn't mean it's still not a short sale. It is actually, because it has an embedded reading. It's just that this is not the spot that I see to do it at. Got it? And that's so important. You know, one of the things you're going to see is I'm going to offer you my charting course. I teach you how to do this analysis. I make you a promise. The course is going to teach you what we're looking at here in a very simple manner. You will get it. And once you get it, you add it to your arsenal and you see what you can do. And no, it's not thousands of dollars like some of these people charge. Why they charge that is beyond me. You're going to be able to get this exceptionally cheap. How can I say it better? Okay. So you got the embedded reading. Until the red line closes back over 20, I think the pros are going to sell this market on the rallies. In the soybean oil, you've re-entered a downside momentum. Remember, the theory here is that momentum, which is slow stochastics, lead price. And if that's the case, it's pointing down. The market's got lower highs, lower lows, bearish under the 18-day average of closes. What I don't like on the trade is that if you were to sell the 18-day average as a pro, you've got to stop all the way over 34.60. It's about a $600 risk. In the corn market, there's no magic. The market went down to the 100-day and the lower Bollinger Band, and it's oversold. It just didn't keep falling. People look at these type of things, all right? Why did it peak up here? I can't begin to tell you. Why did it peak down here? It's things that you observe and you learn from. And this is where I think money was coming off the market. Now, are we trending? We're not. We have a higher high and a lower low. We've had downside bias for 3 days in a row. Nothing wrong with that. But if you were to say, are you trending? No. If you define, as I do, a trend, downtrend, lower highs, lower lows, plural on both, you don't have it. Bias clearly down into support. Wheat, not trending. Higher high, lower low. Market broke today, and now with a reading of 29.61, oversold. If it continues down, support area. If it goes up, 18-day average resistance area. Sugar market, exceptionally bearish. Now, for those of you that read my reviews and my reports, I had mentioned there was a huge firm buying back here. I forgot the name of it. It's Wildemar or something. It's a massive firm. They took 500,000 tons or something of sugar back here from futures deliveries, and nobody could quite figure out why. We still don't know why, but I can tell you this price is really hurting them if they've done that, if they were holding it. Now, if they had it pre-sold, maybe they're better off, but I was shocked to find that the margin they made was only about 2.5%. That's not so big. In looking at it, lower highs, lower lows, embedded reading. I don't know how low we're going, but this chart is ugly. Part of the break is coming out of ethanol usage in South America, where because of how the prices are, they might go back to gasoline. So just be a little careful about that. In the coffee market, this is where the seasonals are still bearish. And you've got a pattern of lower highs. You got the lower lows, actually a double bottom at 139.65. Do you develop an embedded reading is the question on rallies, resistance back in the 145.40 area. Cocoa market. Well, the cocoa market is very oversold. It's clearly in a bear trend. It might be able to reach for the 1864 zone, but it'll take very little for it to get a better short covering rally going. Now, if you look at today's low at 1878, it has not taken out 1869. So if it got a pop here, I don't know that I'd do much with it because you could end up with higher lows and lower highs, not the ideal pattern. Cotton market today. Well, now you've got a pattern of lower highs and lower lows, but, big but, over the 18-day average of closes. Why be involved? It's what I'll call neutral right here. Cattle market, you've got the pattern of a lower low, a higher high. No trend. Momentum, if you believe like I do that momentum leads price, flat as can be, sort of a churning market. And in the feeder cattle, momentum has turned up. The bulls grabbed control of this market again. And remember yesterday we were talking about this and I said markets caught between the 100-day average and the 18. If they wanted to get something going to the upside, you got to take this number out. Go look at what we were talking about. These are not, I am not telling you go out and buy here or sell there. I'm just pointing out what the charts are saying. No way to get a sell signal out of it just yet unless you took out this low from the day before, but then you're right into the lower Bollinger Band. And of course, the market tried the upside. Here's what I don't like about feeder cattle. Very much sideways Bollinger Bands. That's that area where you start getting into churns, if you will. In the hog market, this could be a big failure area today in hogs. You've got to get over today's highs if you want to take that away from the market. Otherwise, this type of action could lean to a challenge back down to the Bollinger Band 100-day average. Take out today's high, which was 68.97.5, and you have what we call a bear trap, and it could kick the market back up here. I think tomorrow's an important day in that market. Now, as I told you about my charting course, let me tell you, if you're watching this, I can teach you all the techniques you're seeing here, plus a host of other ones. How to use inside days, how to use window envelopes. You're going to learn the swing line study just as I wrote it, taught it, and how you apply it to the moving averages with the different filters. And there's more moving averages than you see me using here. My tricks with stochastics, I think you'll find that they're really interesting to go with. The Bollinger Bands, upper and lower ones, how do you work with them? How do you ride with the band? And of course the envelopes. Now this is not a $1,600 course. I don't know why people charge that much for a charting course. What it is this course is normally now $89.95, and with the coupon Ira 15, just type it in, it could be caps, no caps, Ira 15, when you go to our website at www.iraepstein.com, enter that in, you get it. You're going to get access to my $60 a month research. You're going to get a charting software package that's worth $100 a month. And, of course, the course with its 54 videos. And you see what I do, then you join in the morning, a recording that I put out every morning. You see me review the parts that you're learning, and I believe that you'll see it comes together fast. $74.95, how can't you treat yourself to it? So how do you go about getting it? Well, number one, you go to our website, www.iraepstein.com. You can call us at 866-973-2077. There'll be a link here that you can click. It'll take you just where you got to go to buy that. And obviously on other websites, you'll see some of the information about us if you click there, but that's not going to take you to the website on the other sites. The YouTube will, and of course we can right here. If you go to www.iraepstein.com, this is what the daily recommendations are going to look like. This is what the videos look like. I'm Ira. You have a great day.